Good evening, my dear friends. I would like to welcome you to a talk on journey of Indian foreign trade policy from Exim policy to till date. India won the freedom in the year 1947, and planning has taken place from 1950 onwards with the formation of Planning Commission, and the policy of foreign trade started from 1952 and 53 onwards. The early days, the pace of progress was very slow. This policy has gained momentum from 1985 onwards. The time span of each policy was made a minimum of 3 years duration on the recommendations made by the expert committee formed on this subject. Considerable development can be seen if the span of the Exim policy is covered with a minimum of 3 years time. There are different policies which have been drafted and published starting from 1985. This Exim policy 1985, 1988, 1990, then 1992, 97, then 97, 2002, 2002, 2007, 2004, 2009, similarly 2009, 14, and 15 to 20. From the year 2004 onwards, when the UPA government has formed under the leadership of Dr. Manmohan Singh, has changed the nomenclature of exim policy from exim policy into the Indian foreign trade policy. Now we will have a quick look at the various policies with their objectives. In the Exim policy 1985, it aimed at, in the draft paper itself, where it is designed to facilitate the production and make provisions for easier and quicker access to imported inputs and strengthen the base of exports with the technological upgradation and getting savings in the imports. 53 items were decanalized. For the first time, export-import passbook scheme was introduced, and 201 items of industrial machinery were placed in the open general license. Coming to import, about 67 items of raw materials and other components were transferred to limited permissible list. Moreover, the adoption of two-tier policy for computer systems and computer hardware and other basic systems was made. Then coming to 1988, Exim policy. It was announced on the 30th March 1988. This is second of this nature. In this policy, some modifications have been incorporated. A wide number of items covering almost 754 items were placed in the open general license. So also, the scope of imports and exports was widened. Moreover, 26 items from the imports list were decanalized. Coming to the import houses and export houses, the government of India has fixed certain limits for its eligibility. Then coming to Exim policy of 1990. On April 1990, the then government announced a 3-year period terminating the 1980 Exim policy. But of course, the government remained only in power for about 16 months. So it aimed at the expansion of open general list with 82 capital goods were included. And also a system of giving automatic licensing up to 10% of the value of the previous imports was also introduced. Moreover, stock trading houses were also introduced for the raw material components. The next important feature was the duty exemption and introduction of blanket advance schemes. This helped a lot of import and export trade activities. And in the year 1990, the then government withdrew the scheme of import-export passbook scheme, which was introduced in 1985. Then again, with the recent elections, the government headed by Sri P.V. Narasimha Rao announced the Exim policy measures in August 1991. Many reforms were made to strengthen the export incentives and also eliminated considerable volume of import licensing and optimal import compression. Major changes were introduced in the import licensing system. For the first time, export-import scripts called Exim scripts were also brought into the effect. It has simplified the import of capital goods. The government also reviewed the list of restricted goods and made a proposal to shift 98 items from the restricted list to the limited permissible goods, and 37 items were also shifted from limited permissible list to the open general list. Now, the government has decided to abolish the cash compensatory support scheme. At the same time, the government granted concessions to the export promotion zones and 100% export oriented units. Later, in less than 6 months, the government has introduced the liberalized policies in the economy, and in the wake of liberalization and globalization, new policy was announced on 31st March 1992 with the following objectives. In the 92 to 97 Exim policy, the first and foremost step was establishing the framework for globalization to facilitate this foreign trade activity. Second one being the steps taken to promote the productivity, modernization, and competitiveness of the Indian industry in the international markets. Third policy is to promote and also foster the research and development of the country and streamline the import and export trade procedures. This has some other good features where the system of advanced licenses and special import license were introduced, duly replacing the other licenses which are hitherto in vogue, including the open general license. Next aspect is the import of various items which are included in the capital goods were allowed freely, but the care was taken not to include those items in the negative list. Export of all items were declared free, excepting 7 items shown in the negative list, like beef, tallow, wildlife, human skeletons, wood, etc. And also canalized 10 items which were restricted. Special import facilities for quotas and tourism industry was announced. It enlarged the scope of duty exemption by introducing a value-based advanced licensing system. Moreover, self-certification under the advanced license scheme was allowed for the exports from the export houses or trading houses or otherwise straw trading houses, as the case may be. Moreover, liberalized the export promotion of capital goods in this scheme with 15% and also 25% on the goods specified therein. Next, 100% export oriented units and also those located in the free trade zones and export promotion zones were given the allowance of duty free imports. This boosted up their levels. Then coming to the Reserve Bank of India, the then governor had issued instructions to all the bankers to allow the low rate of interest to those who avail the credit given for EOUs or export promotion zone aspect activities, and also allocated the units in the SCZs or EPZs or FTZs, as the case may be, with outstanding credit. Similarly, deemed exports were benefited through duty exemption and duty drawback scheme and terminal excise duty and import licenses were also introduced. Then we'll go to Exim policy 1997 and 2002. It was further advanced with the objectives to accelerate the economy from lower level of academic activities to that of higher level. Because of globalization, the policy also expanded the opportunities for global market in a global vibrant economy. Similarly, for the assurance of quality with international standards to the consumers, the practical prices which are applicable were extended. The next step was to motivate the sustained economic growth by providing the access to essential raw materials, intermediaries, components, consumables, and capital goods for augmenting production. Then we will come to the Exim policy of 2002 and 2007. In this policy, encouragement was given to economic growth by providing the essential raw materials, intermediaries, other components, and consumable capital goods which are needed for augmenting the production. Moreover, it was planned to improve the strength and efficiency of Indian agriculture, industry and services, and thereby improve the competitive strength while generating new employment opportunities and with a view to attain the standards of international markets. The next aspect is aimed at providing the customers with good quality of products and services at the internationally competitive prices. At the same time also creating a level playing field to support the domestic producers was also created. Then within next 2 years, that is 2004 May, the UPA government headed by Dr. Manmohan Singh has taken place, and it has changed the nomenclature of Exim policy from 2004 to 2009 as Indian foreign trade policy. From then onwards, it is being known as foreign trade policy, and it mentioned in its mission statement that trade is not an end itself, but it is a means to economic growth. This policy aimed at doubling the share of global trade in case of merchandise. Similarly, this also encouraged to act as an effective instrument of economic growth, which has given thrust to employment generation in semi-urban and rural areas. Then we'll see the foreign trade policy of 2009 and 2014. Then let us see the objectives. This policy paper was made with a short-term objective of reversing the falling trend of exports with a view to increase the same by giving additional inputs to those needy sectors which were earlier affected by the recession in the developed nations. This policy was set to achieve an annual growth of 15% during the years 2009 to 2011 with an export target of 200 billion US dollars. Subsequently, the Ministry of Commerce revised its targets to achieve a growth rate of 25% with a view to double the targets to be achieved before 2014. For this, long-term policy was also formulated with 1.64% with a view to achieve 3.28% in the year 2020. Then the NDA formed the government and the Prime Minister Narendra Modi has announced the foreign trade policy keeping in view the thrust and support for the Indian products. Make in India was the motto and mission statement of this policy. This has focused and concentrated its support in manufacturing and service sectors with the ease of doing business. The objectives of this policy was very clear: to increase and accelerate the India's exports of merchandise and services from $465 billion in 2013-14 to almost 900 billion US dollars in 2019-20. Almost doubling effect has been aimed at. So also raising of the share of Indian exports from 2% to 3.5% in the global trade. The next important step was the establishment of export promotion mission to provide an institutional framework with the state governments and other organizations to boost the exports. And the novel feature of this policy was the introduction of MEIS and SEIS schemes to boost the outward shipments in the export. MEIS stands for Merchandise Exports Incentive Schemes, and this relates to the goods. Whereas coming to the services, special scheme SEIS, Services Exports Incentive Scheme, was designed in this program. All these were given additional incentives to the export of defense goods, agriculture, and eco-friendly goods with advanced technology. Moreover, they have provided the extra benefits to export the goods on the basis of local raw materials under the above schemes. The most important mantra like system is the implementation of ME-CDC in the trade promotion targets. MI, SI, DI, CI. Now we need to know the acronyms MI, SI, DI, CI. MI stands for Make in India, where it gives encouragement to the products made in India and thus eliminate as far as possible the other imports. SI stands for keeping a motto of saving India by improving the skills of India, which will help in foreign trade promotion and other things. Our talented youth were given opportunities under Deen Dayal Upadhyaya, Kaushal Vikas Yojana to upgrade their skills in different areas and enrich in knowledge. Then comes the Digital India, which is indicated by DI. And the last one being CI, which is Clean India. Because when it is clean in other aspects, the other things will be possible to promote. So, Swachh Bharat was made in the mission statement. In this foreign trade policy 2015 and 2020, it has given so much of support which will help to reduce the export bindings in respect of special economic zones and also to bring the above schemes in the special economic zones as investment destination. Similarly, this policy encouraged e-commerce, online business, and the government will choose the industries with higher employment potentialities and increase the exports like handlooms, books and journals, leather and footwear goods, toys, and other garments with fashion technology. This review period for the policy was fixed as 2.5 years after its commencement. But at the fag end of this policy, in the February 2020, we experienced the worst effect of pandemic corona and exports were badly affected, leading to lockdown of shops and establishments, manufacturing units, and other aspects like workers were rendered jobless and causing a lot of danger to the humanity for its survival. Even in respect of those skilled labor who were in foreign countries, when they were rendered jobless, they started a struggle for employment and foodstuff. The government also timely reacted and launched a special drive for airlifting of those people. Around more than 8 lakh people were airlifted from various nations with a special mission called Vande Bharat Mission, in which 90 special flights were deployed with a more number of operations. And foreign trade policy statement was also prepared It is also released along with the policy document. It mentioned the various strategies for product export, promotion, enhancement of the trade ecosystem, and develop necessary infrastructure, giving a clear roadmap as to the objectives. The policy statement support the nation to enable to face the challenges that may arise in the international issues and also try to have a clear and early settlement by evolving a rapid response system to overcome the hurdles that we may face in the foreign trade policy matters. It has also announced schemes like introducing of new schemes meant for merchandise export incentives and also services exports incentives. Second one is boosting up the export promotion trade guarantee schemes. Third one is boosting of exports under special economic zones. Then initiated the measures for the faster access to the international markets. Moreover, introduced export-oriented units, then electronic hardware technology parts, software technology parts, biotechnology parts, and other schemes like this. Similarly, introduced the Niyat Bandhu for the upliftment of medium, small, and micro enterprises sector with a view to generate employment. Banks are also fixed specific targets in the credit planning to consider as a rule to medium, small, and micro enterprises in a big way. With this, we conclude this speech on foreign trade objectives. Thank you.